Hello, everyone. Welcome, guys. Welcome. We'll start the webinar shortly. Welcome, everyone. This is our beginners class. All right, our beginners class. So, welcome, guys. Welcome. We'll get started shortly. All right. All right. Hope everyone is having a great Saturday morning. All right. We'll get started shortly. If you guys would, as you enter, uh, just put in the chat how if you have any experience trading. All right. So if you've been trading a few weeks, few months, few years, or if you haven't traded at all, just put that in the chat for me, please, with your name. All right. All right. Welcome, everyone. We'll get started shortly, guys. We'll get started shortly. Hey, Gigi. Welcome, Gigi. Hey, Basil. Welcome, Basil. Welcome. Thanks for being here, guys. Thanks for being here. We'll get started shortly. This is our beginners class. All right. So our beginners class for beginning traders. All right. Richard, welcome. No experience. All right. All right. Okay. So Basil, 1 to 5 years trading Forex. Oh, you're brave. You're a brave man. All right. All right. We have a lot of Forex traders with us. A lot of Forex traders that trade with us. Okay. Forex is a very, very popular market. It's a 24-hour market. So great market to trade. And also futures too. Futures are becoming very popular with a lot of our traders. All right. Welcome, guys. Welcome. Let's go ahead and get started. All right. I appreciate you guys taking your Saturday morning to learn about trading. All right. If you guys have any questions as I go along, just put it in the chat. And you can also, there's a button you can click to speak. You can actually come on and if you want to speak with me, you can also do that. Okay. Any questions you guys have. I call this your safe space. All right. Now we do, I don't know how long you guys have been around with us. But we do evening classes. Oh, by the way, my name is David Stephenson. All right. I am with Monster Trading Systems. I've been trading for about over 25 years now. All right. So I've been around. I've been through just about every correction and bull market. And about 13 years ago now, I started a company called Monster Trading Systems. When you guys have a chance, you don't have to do it now. Just click on the link here. You can go to the website, Monster Trading Systems, learn more about us. All right. We do coaching. I do a lot of coaching with new traders. All right. I build also trading systems. So on the website, you'll find different trading tools and systems that I build for our traders. All right. We have hundreds of traders all over the world. All right. We're located here in Orlando, Winter Park, Orlando area in Florida, but we've got traders all over the world. Okay. Most of the traders that come to us have no experience. All right. So you guys are in the right place. All right. You're in the right place. I'm going to give you guys some tools this morning where you will have clarity. So whether you trade Forex like Basil, no experience like Richard, you guys will have, I'm going to give you some tools some foundational tools that a lot of folks miss in this industry. All right, as far as teaching. All right, in trading, and everyone has a different reason to trade, right? A lot of folks come into the industry, obviously to make more money, have a second stream of a third stream of income. All right, a lot of traders come in for financial freedom. All right, and then just the love of trading. All right, so the goal is to get you guys remove some of the fear about trading, get you some really good tools so that if you want to write a career in trading, which it is, then you know how to start and do it the right way. Okay, so I'm going to go through these tools. We have the class scheduled from 11 a.m. to 12. We won't go that long. All right. I know you guys, it's Saturday morning. I appreciate you guys taking the time, but I'll try my best to go through this and not keep you guys too long. All right. So let's get started. Again, this is for you guys. All right. So we don't have we set this webinar up so that it's only brand new traders. We have a lot of traders that are experienced. They're not on here. All right. So I call this your safe space. So feel free to ask questions. Stop me at any time. All right. All right. So let's go right into it. All right. So again, my name is David Stephenson. I have to say, our students, our trading students love the way I teach. All right. They like the fact that I am able to keep trading simple, keep the concept of trading simple. I always say trading is simple, and everyone asks me, well, David, how can trading be simple? Everyone talks about how complicated it is. All right. Well, trading is simple, but it is not easy. All right. So just remember that. All right. And please, guys, you want to have something to write with, to take some notes. Okay. All right. So trading is simple, but it's not easy. All right. Simple, but it's not easy. And a lot of times what happens, and what I've found through the years, is that we can take someone without any trading experience. I love working with new traders. All right. Love working with new traders. If we've got traders with 10 years, 15 years, 20 years experience, they've developed some really bad habits, and those are hard to change when we do coaching. All right. So with new traders like you guys, you have a clean slate, and it's really easy to get you guys going once you know how trading works and the principles of trading. So we can take someone without any experience, and within a week, not a week, a month, let's say a month or so, they're trading like a professional trader. All right, like a professional trader. Not that you're going to make money, right? Like as much money as a professional trader, but you understand, and you will, trade much like a professional trader does. And we'll go through what professional traders do. All right. So that's me here. This is by far, all right, this is by far the most important book I would recommend for you guys as new traders. All right. As new traders, or if you're like Basil, you've traded for a while and you still, trying to get things figured out. All right. So this book here, write this down, right? Write this down. It's called Trading in the Zone by Mark Douglas. All right. Trading in the Zone by Mark Douglas. There are tons of books out there on trading. All right. But it's important that you get the right information. All right. And that's what I'll get you guys, the right information. All right. So this book, Trading in the Zone by Mark Douglas, highly recommend this book. All right. Master the markets with confidence, discipline, and a winning attitude. All right. Very good book. By far, best book I've come across for new traders understanding how trading works. All right. Trading is not gambling. All right. We don't just randomly enter trades. All right. There's a process to it. We have to develop our mindset. All right. But most importantly, we have to understand how trading works. All right. It's very different than anything that you guys have done. So whatever you think about trading, you've thought about trading, I can tell you it's probably not the right way that you're thinking about it. Okay. So Trading in the Zone, all right, by Mark Douglas, How to Master the Markets with Confidence, Discipline, and a Winning Attitude. All right. Now, this book is so important. We give it free to our coaching students. All right. So don't run out and buy it. You can actually go on YouTube. All right. So you can go on YouTube and it's free audiobook on YouTube. So when you guys are done here, if you're serious about trading, just go start listening to it and listen to it over and over and over and over. All right. Trading in the Zone by Mark Douglas. Just put it up on YouTube, start listening to that information, getting that information. All right. Every single trader that I've recommended this to, they always have a wow, an aha moment, an aha moment. Okay, so good information here, and again, it's free. All right, all right. I really like books. All right, the book that changed my life. You know, I've been trading, like I said, a long time. Started in about what 1991. 89 in the late 80s, 90s when I started trading. And I wish I had some of these resources that you guys have now. All right. Some other tools here that you guys might want. All right. Now, again, we give these books, right? These are guides. We give these to our coaching students. All right. But you can, you can certainly get these also on your own. All right. The Ultimate Guide to Swing Trading. All right. Another good resource, the Ultimate Guide to Swing Trading, the Ultimate Trading Risk Management Guide. And these are quick reads, small quick reads, guys. All right. They're just guides. The Ultimate Guide to Technical Analysis. All right. And I want to spend a little time on each of these. All right. Now, as traders, what I want you guys to think about, right? Trading is, we think a lot. It's about the process. All right. So we do a lot of thinking, we do a lot of waiting, and then we spend 10% of our time, 20% of the time executing. What we have to understand is that as a trader, right, there are three types of trading. All right. All right. There is a day trading. A lot of new traders, when you come into trading, come into the business, right, coming into the industry, right? Most traders come in, right? You've heard the term day trading, all right? And everyone wants to be a day trader, all right? And we have traders that are day traders, right? Another type of traders is a swing trader, swing trading. All right. And I'll go through those. Okay. Another book I have read is one. Okay. Gigi. Okay. One Up on Wall Street. Okay. I haven't heard of that book. Okay. But yeah, they're good books out there. Just be careful though. All right. Just be careful as a new trader. We want to keep it real simple. All right. We want to keep it real simple. All right. So, but what you want to do, if you guys are reading, and you want to read books, but you want to get the right information. A lot of books, right? 90%, 80% might not be relevant, but you might just find, one tip. If you can get one tip, all right, that's what I teach traders, right? One tip, one skill, right? That might make a big difference. All right. All right. So good job, right? Read, get that information. Okay. All right. So swing trading. So write this down, guys. Write this down for me, please. All right. All right. There are three types of trading, and the trading is based on the time frame. All right. All right. So the first type of trading is called day trading. All right. Day trading, intraday trading, or scalping. That's the first type. Day trading, intraday trading, scalping. All right. And that's done on a smaller time frame. All right. Meaning your candle, right? Your candle will open and close. All right. On a smaller time frame. Right. So time frame doesn't mean it's a day, right? Or a month for the trade to run, right? Time frame meaning from when the candle open and close. All right. So the first type is a day trader, intraday trader, all right, or a scalper. And sometimes, those are called also high frequency traders. Those traders trade on a 30-minute, right, time frame. Write those down, and you guys will. I'm going to get to my point in a minute. All right. So 30-minute time frame. Anything lower than a 60-minute or 1 hour time frame is called day trading, intraday, scalping. All right. 15-minute time frame, a 5-minute time frame, or 1-minute time frame. All right. So day trading, intraday, scalping, you're going to close that trade within the day. So you're going to be in and out within the day. In and out within that day. You will not hold any positions overnight. Okay, very important to know. All right. The next type of trading is a swing trader. All right, a swing trader. Right. So right here, the ultimate guide to swing trading. All right. Now, swing trading starts with a 60-minute time frame or a 1 hour time frame. So that candle, all right, your candle will open and close, right, every hour. So that data, right, that price action data, what we call, right, will open, that candle will open and close. All right. Keep in mind, every time, guys, that candle opens and closes, right, you have to make a decision, or you might have to make a decision. Right. So that's important to know. Okay. All right. So swing trading, 1 hour, write this stuff down. It will make sense. If it doesn't make sense now, as we go through it, as you come and you learn, it will all come together, especially as brand new traders, right? If you're brand new, never taken a trade, all of this is foreign, right? But we need to understand not only the terminologies, but the process, the game. It is a game. All right. But it's a very rewarding game, right? Very rewarding game. You can do really well financially, right? But we need to know the game that we're in. All right. All right. So swing trading, 2 time frames. There's 2 time frames where we can do swing trading on a 60-minute time frame or 1 hour, 60-minute, 1 hour, or a 4-hour time frame. All right, so write that down. A 4-hour time frame or 240-minute time frame, which is the same. 4-hour time frame, 240. Some traders call it an H4 or 4H. All right. So day trading, intraday, 60 minutes or less, below 60 minutes. Anything below 60 minutes, intraday. You're going to stay in for that day. You're not going to hold any positions overnight. Swing trading, all right, swing trading, 60-minute time frame or 1 hour, all right, to a 240-minute time frame. Now, notice that we have specific time frames, right? It's not a 30-minute time frame. It's not a 90-minute time frame. We said 60 minutes, 240. The reason why these time frames are specific is because other traders, right? When you trade, you're trading with other traders and you're competing with other traders. All right. So you need to know what the time frames other traders are trading on so you can basically see what they see. If you're trading on a different time frame, guess what? Right? You will not see what they see. You will not be trading along with them. All right. Meaning the big institutions, the big hedge funds. All right. So those time frames have to be specific. All right. A 1 minute, a 5 minute, a 15 minute, not a 17 minute, a 15 minute. All right. A 60 minute, a 240. All right. And then we have a daily time frame. The daily time frame, that's called position trading. So write that down. So we have day trading or intraday, swing trading, and now we have position trading. You guys have to understand that. You have to know those time frames as new traders. All right. We don't just go out and start buying a stock, crypto, because we heard it on the news, right? Or from a friend. All right. All right. So day trading, intraday, right? We basically, for day traders, you're going to be glued to your screen, right? You're going to be in front of your screen, glued to it. You're trading on a smaller time frame. If you trade on a 1 minute time frame, every 1 minute, that candle has to open and close, right? That candle is going to open and close every 1 minute. Every 5 minutes, same thing. And you might have to make a decision. You might have to make a decision either to get into the trade or get out of the trade. So imagine, right, if you're working, right? You're working 40-hour week and you're at work and you're trying to day trade, and that you're trading on a 1 minute time frame or 5 minute time frame, and now you have to pay attention to your trade, right? Every 1 minute or every 5 minutes, where you might have to make a decision. Not very effective. Not very effective. Now, someone that's retired or is a full-time trader, we have retired traders, we have full-time traders where they're glued to the screen, right? They can do that. They could day trade. They could day trade. All right, because they're there in front of it. They can see every single move. They can react quickly to either enter or exit. All right, big difference from swing trading. Swing trading, guess what? You have you're trading on an hourly time frame or a 240-minute time frame. So you have a whole hour before you might have to make a decision. All right, swing trading. Or on a 4-hour time frame, a 240-minute time frame, you have 4 hours, guys. All right, before you have to make a decision either to enter or exit the trade. So time frames are critical. All right. And the way we want to look at time frames is not just how much money we want to make and how quickly we want to make it. That's important. But most importantly, does this trading, does it work with my life? All right? Does it work with my schedule? All right. So something that we do with when I work with traders, right, and I do coaching, we want to make trading part of your life. All right. Most new traders, because this is all new and exciting, right? And there's this, we know we can make money, right? We hear about all these stories about folks making all this money. We want to kind of stop everything, right? We want to quit our job, work full time. We want to, We stop spending time with our family and friends, and it's all about trading. That's not good. All right, that's not good. What we want to do is have trading complement our life. All right. All right. So we want trading to complement. We want to use it as a benefit to our life. And the time frames can do that. Using the time frames correctly can do that. All right. So we have our jobs, right? As new traders, guess what? You're not full-time traders. You haven't figured this thing out yet. All right. So you have your job, you have your family, you have everything in place. So what we can do is you find a time frame to complement, all right, our life. So on our downtime, on certain days, I have traders where they work overnight, right? They work overnight, where Forex might not be a good market for them, all right? Because that's when Forex really moves, all right? So we have to find the market and the time frame which is going to fit, that will fit with our life, right? Imagine changing, right? Totally changing our life, our daily life, our family life to trade. It's not going to work. It's just not going to work. All right. Something has to give. Okay. So I want you guys to just think about that as brand new traders, right? Think about that. All right. Now, because you don't know all the aspects of trading. All right. Just learn how you can do that. The successful traders, right? What they have done is figured out they don't just trade every day. They don't just trade every time frame. They find a way, all right? The markets are not going anywhere, all right? So even if they miss an opportunity, there'll be another opportunity. Okay, so just know that I spend a lot of time on time frames because it's important. All right, the most popular time frame that new traders want to get into is the smaller time frames, right? The day trading, scalping and all of that. But the most successful time frame, all right, and trading is swing trading. That's why we have it here. All right. So with swing trading, you can still work. All right. Still keep tabs on the market, but you're not glued to your screens. All right. And what it does also, it allows your trades to run. All right. Run meaning that you can let it run and make money. The way we make money in trading is by cutting our losing trades quickly. And you guys will learn that with trading in the zone. The way we make money is by cutting losing trades quickly and staying in the winning trades as long as possible. And what that does is, right, as traders, we take losses, guys, right? We'll have on any given week, any given month, we might have 67% losing trades. And we still can do really, really well. All right. Because what we do as traders is we are able to keep our losses small losses, right? And then when we catch a run or a move, all right, guess what? We need to stay in that trade as long as possible to capture as much of those profits. All right. So we need those profits to pay for our losses. So we can have 10 losing trades in a row. All right. As long as we keep those 10 losing trades small. All right. And then we get that one big trade and we let that trade run. And we can do that with swing trading. Right. That one trade can pay for all of our small losses. All right. So that's the goal. All right. That's the goal. So just remember that time frames. All right. What you guys want to make a note of this. I'm not a swing trader. I am not a day trader. I'm not a position trader. I am just a trader. I am just a trader. Okay. Our traders are constantly moving the time frames based on what they want. All right. A lot of new traders comes, hey, all you know is, hey, does day trade, day trade, day trade? No, we are traders, right? We're traders. So we can trade on any time frames once we know based on our schedules can be, be dynamic. So we want our trading to be dynamic as well. All right. The next resource that we give is Ultimate Guide to Risk Management. In trading, guys, I pride myself. Like I said, I've been trading for over 25 years, right? I've been teaching traders, building system, coaching traders. We very seldom have traders blow up accounts. All right. And Basil, if you've been trading Forex for 1.5 years, you probably blew a few accounts. All right. Most of our traders do not blow up accounts. All right. Meaning that they deposited money. All right. And let's say a month later, they've blown their account and now they have to fund the account again. Most new traders will blow 3, 4, 5, 7, 10 accounts before they really get it. All right. Most of our traders, all right, a lot of our traders, they don't blow up accounts. And the reason why they don't blow up accounts because they have really good risk management. All right. So the ultimate trading risk management guide. Risk management, when the way it's taught out there, all right, is to provide the correct size, all right, size and trade the right amount. And that's critical. That's absolutely critical, not to over leverage your account, right? To trade the 1%, 2% of your account, all right, 10% of your account, 1% of the trading that individual trade, right? We do something a little differently when it comes to trading, all right, through risk management, all right? And I want you guys to write that down when it comes to trading risk management, managing your risk. It's all about your entry and your exit, okay? And all about your system, your process. That's risk management. How you analyze the trades, how you take the trades, okay? Right? The amount that you trade is important, but it's not as important, right? It's not as important as how you trade, all right? And I'll go into that. All right, write that down with risk management, support, and resistance. So somewhere right below, just write, risk management, support, and resistance. All right, so we can control the risk, manage risk, right, by using support and resistance. All right, and I'll spend a little time on that. All right, and then technical analysis. The ultimate guide to technical analysis. Now we give you guys these guides here, but they're available out there. All right. Now technical analysis. Be careful of what you get into here when it comes as a trader. Right. We don't listen to CNBC. All our traders follow what we call price action. We don't follow the news. All right. So price action. That's your candlesticks. Remember I said it's going to hourly time frame, swing trading, hourly, right? That candle is going to open and close, all right, on an hourly time frame. That's what we analyze. We analyze the candle. So we do technical analysis. We don't do fundamental analysis. We do technical analysis. Fundamental analysis is looking at all of the fundamentals, right? Earnings report, PE ratio, all of that stuff, right? We analyze as traders, right? As price action traders, we analyze price only, all right? If it's going up, guess what? We trade it up. If it's going down, we either trade it down short or we stay out of it, all right? So we analyze price. Traders, technical traders, pay attention to just the price, just the candles. All right. Now, those of you who've been around, right? Basil, you have to be very careful as new traders not to bring in, right? Pay attention to a lot of indicators out there. All right. We want to keep our chart simple so that we can just focus on the price action, All right. All right. So these are some fundamentals, basics that you need. All right. To get started. So first book right here, Trading in the Zone. This is a must. All right. These guides here, right? Very simple read, very easy, simple read. Goes into the time frame. The type of trading that you really need to do is swing trading to capture those profits so that it pays for your losses. Risk management, all right? How we manage the trade. That managing the trade well will provide risk management, built-in risk management. All right. And then technical analysis. We focus on just the price action. All right. All right. So support and resistance. Right. This is risk management. Right. If you do support and resistance well, this is where you will manage risk. All right. Now, some of you might have heard of support and resistance, right? If not, welcome to support and resistance, right? You guys should find the guides, right? You should find support and resistance. There should be 3 or 4 of them in your that you can just download. And I always say just download this when you get a chance. All right, print it out. So you guys should have those, right, in the chat. All right, print it out. If not, let me know. Print it out and then laminate it. It's that important. Okay, it's that important. So support and resistance, the keys to your success. Support and resistance, the keys to your success. Very important, very important. Okay, there are different terminologies for this, for support and resistance that are out there. All right, but it all means the same. All right, so we don't just randomly get into trades, guys. All right, we don't just randomly get into trades. We get into trades by, right, at resistance, when the price breaks resistance, and we sell on support. All right, some of you, if you're familiar with support and resistance, right, some traders will buy at support and then sell at resistance. Okay, that's okay too, but it's not the best way to trade. All right, so let's talk about support and resistance. All right, think of resistance as your ceiling. So where you are right now at home, all right, resistance is your ceiling. Support, where you are at home, your floor, support is your floor. All right, the reason why support and we have support and resistance is because there's always a battle between buyers and sellers. When you trade, guys, there's other traders, right, trying to take your money. All right, and what we are trying to do is take money from other traders. It's what we call a zero-sum game, right? There's no sharing in trading. When you're trading all by yourself, all right? And you're trying to win. And the way we win in trading is we make money, all right? So you have to be selfish about this. Every time you lose, you have a losing trade, someone else won, right? So they have a better process, better knowledge, better skill level that you don't have. All right. All right. The main goal in trading is defense. We've got to play really, really, really good defense. If we play good defense, the offense will take care of itself. The way we play really good defense is by support and resistance. All right. Understanding this really, really well and then executing based on support and resistance. All right. So The way support and resistance works is like this. This area here is called consolidation. Write that down, right? The middle area here is called consolidation, accumulation, or distribution. All right. But the way we get this information in here, if you guys can see my cursor moving here, if not, let me know. All right, is by this. So let's say the price moved up, made a high, is what we call it, to $100. All right, and it stopped right here at $100. All right, let's do this. Hold on. Hold on. All right, so you guys should see my lines here. Okay. Okay, can you see, basically, can you see my lines now? Can you guys see the lines I'm drawing here? And because I know sometimes the cursor, it's hard to see the cursor. So if you guys can't see this, let me know, okay? So here is resistance, and then here is support. The way support and resistance is made is by price. Okay, awesome. Price making a low. All right, price making a low. Perfect. Thanks, guys. All right, so let's say the price fell from $100 here, from $100, and it fell all the way down to $50 here. All right, $50 here. All right, the institutions, guys, institutions are always looking for a deal. As retail traders, we cannot, right? We cannot control the price. We have to wait for the institutions, all right, to control the price. They control the price. As retail traders, we can't control the price. So what we do is we have to follow, right? Follow what they do. So let's say the price fell from $100 to $50 and it bottomed out, all right? If the price comes down a minimum of twice, so here and here, we now have support. Gigi, no. So no, it's not best to buy when it's low. Now, yes, we do want a low price, but we have to wait. All right, and I'll show you how. Okay, I'll show you how we do that. All right, so let's say the price comes down to $50. That's the low. All right. Every time the price comes back down, remember, buyers and sellers, they're trying to position themselves, right? But what happens here, most importantly, is that the institutions, all right, are building positions. So write this down. They are accumulating shares. They are accumulating shares at the low price, the $50 price. All right. And what they're doing is they're protecting, the buyers are protecting, or the institutions, they have decided, okay, $50 is that price. $50 is our price. We will not let that price move any lower than $50. We're going to hold it at $50. That is your support. That is your support at $50 right here. So every time the price comes down to that $50 level, they're stopping that price from moving below 50. That is your support. That is your floor. All right. Very important. Very important. That's your support. Support here. All right. Resistance is made when the buyers push the price up. Let's say that is $75 here, this line right here, and the price can't go any higher because the sellers all right, are holding the price. They're coming back down and they're saying, no, we're going to hold the price right here. Every time buyers push the price over to resistance right here, all right, that $75 mark, the sellers are coming in and says, no, that's it. We're not letting the price move any higher. All right, we're going to keep it right at resistance. All right, first time is just a high, just like the first time here is just a low. The more times, right, price holds support, the stronger the support. The more times the price holds resistance here at $75, the stronger the resistance. So we have support here, buyers here. Price hasn't broken support. Price hasn't broken resistance. All right. This is called accumulation. And what the institutions are doing is they're building, guys, building what we call blocks of shares. All right. Building before they move the price higher. Most new traders get caught up in here. You guys don't want to do that. Most new traders are trading between support and resistance. No one is in control here. All right. And Gigi, you mentioned, hey, buying low. This is what most traders will do. They'll buy low here near support where the sellers are sitting, and then they'll sell here at resistance. Can you do that? Absolutely. This is called a range trade. You can trade between support and resistance. But there's a lot of chaos in here. All right. No one is in control. Guess what? The institutions haven't decided whether they're really going to start buying or really going to start selling. The price is just taking a rest, taking a breather. Let me repeat. The price here, when the price is between support and resistance, it's taking a break. So we should also take a break. But as new traders, we don't do that, guys. Right? We trade. We always want to be trading. All right. So what happens is this. All right. The institutions, they got a low price, fell from 50. If they start buying in large amounts, guess what? That will alert. And I know this is a bit technical, but you guys have to understand how this game works, all right, to be able to win at it. All right. So what the institutions are doing is they're continuing to buy small amounts, small blocks of shares, right, in this area here before they move the price higher, right? If they want a lower price, they will move the price lower and then do the same thing again. If they want the price to be at $30, let's say, before they're ready to buy. All right. So, okay. So just understand resistance up here, support down here. This is not tradable. When do we trade? When do we enter the trade? When the price finally breaks resistance here. Okay, so when the price finally breaks resistance, we know that now the buyers are in control. All right, and that's when we buy. So write this down, please. I know a lot of these brand new traders, this might be foreign, but just write it down. Write it down. Yes, Basil. Yeah. All right. So write this down. You're going to buy. When do we buy? We're going to buy, write this down, when the price breaks resistance right here. We're going to buy when the price finally breaks resistance. And we're going to buy when the price breaks resistance because the buyers are in control. Because the buyers are in control. All right. We're going to only buy when the price breaks resistance. And when the price breaks resistance, we now know that the buyers are in control, the big institutions. All right. So we're going to buy when the price breaks resistance. And we're going to sell, exit, close the trade, done when the price breaks support. All right, so write that down. We're going to buy when the price breaks resistance, sell when the price breaks support. Buy when the price breaks resistance, or buy on the break of resistance, sell on a break of support. Buy on a break of resistance, sell on a break of support. We're going to buy on a break of resistance because the buyers are in control. The buyers are in control. If no one is buying, guess what? We don't buy. If no one is selling, guess what? We don't sell. All right. Very important. So we're going to buy on a break of resistance, sell on a break of support. Buy on a break of resistance, sell on a break of support. Buy on a break of resistance because the buyers, not because we want to buy, not because David wants to buy, because the buyers, the big institutions, the buyer buying, we're going to piggyback on their trade. And when they're done, right, we know that they're done buying. When the price breaks support, if they're done buying, guess what? We need to be done buying. Simple as that. So I said, trading is simple, but it's not easy. All right? Because we want to do our own thing. We want to buy when we want to buy. We want to sell when we want to sell. And we'll never win that way. All right? So that's the way I want you guys to think about support and resistance, right? This will control your risk management. What I just went over is risk management. That's how you're going to control your risk. All right? That's how you're going to control your risk. All right? We've got a few more minutes. I want to talk about this. This is the last one. I have some more, but this is the last one I'm going to share with you guys today because I want you guys to get out of here. Okay? All right. So write this down. And you should have it in, you can take it's in the chat. You can download it. You can download it. I tell all our traders to print it out. It's something about when you're able to, when you print something out. I'm old school. I've been around a long time. All right. When you print something out and you laminate it, I tell traders laminate it, put it near your trading desk. Okay. So you have it, you remember it. All right. Same thing for support and resistance. Those are your tools, right? Those are your tools, and you need tools. You need really good tools. Okay. Gigi, yes, sell on a break of support. Yes, sell on a break of support. Buy on a break of resistance. Sell on a break of support. Okay, so let's talk about it here. Write this down. The 4 market phases that every trader must know. The 4 market phases that every trader must know. You guys must know this. You have to know this. Okay. All right. Now we've had traders with a lot of success. We just had a new trader, went through the coaching, 1-month coaching. All right. And then started trading 2 weeks trading, trading one of the most difficult market, the futures market, trading the US 30, and never traded before, had no losses out of 14 trades by understanding this. Now, he's going to have losses, right? Losses is part of it. We just want to control those losses, and made 600. It was amazing. $617, right? In one day. He had never made that kind of money in one day. We just did just met with another one of our traders yesterday on one of our our traders. We have classes with just our traders on Friday. His name is Dean, and he's making on average $5,000 a week. $5,000 a week. All right, and had traded for a number of years and never really got this concept. Once he got this concept, guys, change his trading. All right, the benefit you guys have. All right, most of you, even Basil, a year and a half is nothing when it comes to trading, right? So the benefit that you guys have, if you get this information quickly up front, all right, yeah, it's like chess. It's like chess, Gigi. Yeah, it's like we are playing a game of chess. Okay. All right. So this is the way it works. So we talked about the price fell down here. Let's do this. The 4 market phases that every trader must know. The first phase, write this down, is the accumulation phase. And I like traders to write things down. Even if you have the chart, write it down. Write it down. You'll remember when you write it down. Right? You want to hear it, see it, write it. All right? So the first phase, the accumulation phase. Second phase is the markup phase. Third phase is the distribution phase. Fourth phase is the markdown phase. So let me repeat. There's only 4. So you don't have to remember a ton. Only 4. All right? And most traders have no idea of this. So you guys will be at an advantage. All right? And what we want as traders is we want to have advantages. We want to have everything that we do as traders is to give us an advantage. I call it arrows, right? Right? We want to gather all these arrows so that when we go to trade, all right, when we go to trade, we have all of these bullets. Boom, 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 boom. All right? So accumulation, markup, distribution, markdown, and then it starts all over again with the accumulation phase. There's only 4 phases. That's all you need to know. The 4 market phases that every trader must know. You guys have to know this. You have to know support and resistance, and you have to know the 4 phases. You just have to know this. No getting around it. You have to draw in your support and resistance lines, and you have to understand, all right, your roadmap. Think of this as your roadmap, where the price is currently, what stage it's in, so you can take advantage of the price action. All right. So again, accumulation, markup. Within the markup phase, there is reaccumulation, distribution, markdown. Within the markdown phase, there's redistribution. All right. And then starts all over again, number 1, with the accumulation phase. All right. So let me go through it. All right. So remember, we talked about prices up here, fell down. All right. From $100 to $50 here. All right. That's your support right here. That's the first phase, the accumulation phase. The accumulation phase will normally come at the bottom of your chart. So if you look at the price chart, it's going to come at the bottom left, middle, center, or right of your chart. That's the accumulation phase. That's where the big institutions are gathering, building positions. All right. So here is support. They're holding that price at support, holding it at support. Here is your resistance line here. All right. The accumulation phase, consolidation phase. We don't buy in here. Most new traders buy here and they try to trade here, buy low here at support, sell at resistance. Can you do that? Absolutely. There's a time to do it. There's a time you can do it, not the most effective way to do it. All right. So while this is happening, we are waiting, patiently waiting. For what? For the institutions to now decide to move the price higher. We'll know that they're moving the price higher when the price breaks resistance. right here. All right. And you guys probably can't see my cursor, but you guys can see the chart here. When that price breaks the green line here, resistance, that's now the markup phase. That's when we start buying. Okay. Within the markup phase, right, we're going to have new accumulation, right? That's called a reaccumulation. When we have another accumulation, just understand the price doesn't go up in a straight line, so it has to rest, right? And that gives the buyers an opportunity to add to their positions. Okay, so where there's reaccumulations, just note that there are new buyers entering the market to push your price even higher. So accumulation, markup. So in the markup phase, we should be buying. Write that down. Markup phase, we should be buying. We call that long. We're going long. We're going up. If you guys are not aware of this, if you're not aware that we're in the markup phase, that stock, that Forex pair, that futures, crypto, whatever, if you're not aware that's in the markup phase and you're not buying, guess what? You're going to miss out. Okay. Stage three, the distribution phase, where the price can't go any higher. It doesn't go up forever. Can't go any higher. It's going to stop. It's going to create resistance. Price can't go any higher. When it breaks resistance, when it breaks support, the red line there, red line breaks support, that's distribution. It's over. That's where we would sell, exit, close the trade. So we would buy on a break of resistance, sell on a break of support. Remember, buy on a break of resistance, sell on a break of support. Like Gigi said, right? Buy on a break of resistance, sell on a break of support. That's our trade. That's the trade. All right. Once it's done, once we sell on a break of support, because sellers are now in control, guess what? We are out of the trade. Right? We've taken our profits. We are done. Right? Sellers are now coming in. That's called the markdown phase. If you guys are buying in the markdown phase, it's not going to work. If you're not buying in the markup phase, all right, and I've seen traders do all sorts of things. All right. All right. If we're not buying in the markup phase, and guess what? If we are buying in the markdown phase, I don't care what you do, you're going to lose. Okay. Because now you're not in the flow. You're not doing what the other traders are doing. The smart institutions are doing. All right. And as I said, trading is simple, but it's not easy. All right. So we have to fight ourselves, right, from doing this and doing this. If you split it down in the middle, you will see this is the buy side. This is the sell side. All right. So phase one, accumulation. Phase two, markup. Phase three, distribution. Phase four, markdown. And then it starts all over again with the accumulation phase. All right. So normally what we do as traders, depending on which markets we trade, we are waiting in the accumulation phase, waiting. Price breaks resistance, we're going to buy. That's the markup phase. Break support, we're going to sell. All right. Whether the break of support happens here, right, we're going to get out, close the trade. All right. Okay, thanks, Basil. Thanks for coming in. We're done. Okay, we're done. Okay, guys. So I have a couple more slides here. If you guys want coaching, okay, we do one-on-one coaching. Okay, we do one-on-one coaching with me. All right. If you guys have a chance to go on the website, monstertradinsystems.com, Go through some of the testimonials. If you guys really want to trade, I highly recommend some coaching. All right. I've made it affordable. We've made it affordable so that anyone, it's affordable for anyone. All right. But get some coaching. All right. So that you learn how to do this the right way. The right way. All right. So we have a beginners coaching, right? Which is 4 hours. We do one for 1 month, 1 hour per week. All right. For 4 weeks. All right. Our traders love the coaching. They love it. All right. But go on, do your due diligence. Look at the testimonials on the website. Look at the success stories on the website. Okay. Intermediate coaching, we do 8 hours. Don't recommend that for new traders. All right. That's for some of our traders who've been with us for a while, and they want to just kind of brush up on their skills. All right. That's not for you guys. And then we have advanced coaching. We have 6 months. All right. 1 hour per week for 6 months. Those are our traders that have been with us, been trading for a while, and they're just trying to get their trading to the next level. All right. We just had a conversation with Dean, and he's doing an average of 5,000 a month. All right. I'm working with him. And he's busy because he works. We're trying to get him to about $8,000, $8,000 to $10,000 a week. All right. So what I do is I work with those traders. Just like these prices have resistance, like we have support and resistance as traders, right? We have also resistance also, right? We get to a point where we are comfortable making a certain amount. And as a coach, I'm able to help traders build them up, build the skills level and the mindset to constantly trade more and more and more and more. All right. All right. So just if you want coaching, I'm available. All right. It's up to you. You don't have to do it. All right. I normally do Q&A. All right. But I know I've gone past. All right. So you guys can just send me if you have any questions. Just send me any of your questions. Okay. Awesome, Gigi. I'm glad you like this, guys. This information here is your foundation. It really is. Now we get more once we start trading, right? We get deeper, right? But that's your foundation. If you guys need to reach me, I'm going to put my information here. 407 733. All right. 0185. You guys can contact me there. Also on WhatsApp. The website is www.monstertradin systems systems.com. All right. And then my email, David. I'm always available, guys. David you can tell I'm passionate about this. I've been doing this a long time. I get pleasure, guys, from you guys being successful and making money. It's what I love to do. David at Monster Trading TRADING systems stems.com. All right. So you guys can reach me if you need anything. Hey, have a good weekend. Okay. Awesome. All right, guys. Take care. Have a great weekend. All right. Take care. Bye-bye. Thanks for coming. Bye-bye.